Hey everybody, George Moorhead, Bentley Properties, just doing a quick February market update. I got to kill a myth right now with the market. I'm going to start with this one. So the media has been saying that our home values have been going down. That's not the case. What they're quoting it correctly, but they're there to create some sensationalism. But here's the thing, right? So the median price of what was purchased, that's different, actually went down from what it was year over year in January. So what that means though is that our values are still, well, it's more like this, are still gradually going up. However, what was being purchased, and that's a combination of interest rates, it's a combination of buyer confidence, or what they call volatility in the market. It's also going to be based on inventory levels. Now, we still saw a really strong fourth quarter last year, as expected and as we described. This year, our spring market is still going to be bopping right along. Interest rates, the Fed said, you know what, we're going to stay the course based on the international, the European market, and a few other things that are going on. They are going to be holding fast and not doing any rate increases. In fact, par pricing was, about 4.8, 4.75. At the end of Q4, we're actually down to about 4.25. So we've actually come down in rate, and there are some, depending on how much you put down, some rates are a little bit lower than that. So the other big item that came out was, our inventory. It's going crazy, right? All right. So yes, it's up 144%, but 144% of a small number doesn't make a very big number. Okay. So we are still only at about 3 months of inventory. Now, a healthy market is 4 to 6 months. Okay. So we're getting closer to a balanced market, which means that we're, and what many of the buyers and sellers are now saying is that they have more confidence in the market. The volatility of the market is actually starting to diminish. And so we are seeing more activity. We saw actually quite a bit of activity in January. It's February 25th, and we've seen some really good activity. And yes, the March, April, up until about mid-May is still going to be what we figure our strong spring market. A lot of people say, hey, why is mid-May a drop, kind of a falling off of our market? That's because, surprisingly enough, a lot of kids are getting out of school, families are preparing for that, vacations, things like that, and it is just historic. Then right after July 4th, whoop, we head back up again, and then towards the end of August, whoop, the market falls back down again until October, and then it heads back up again. All right, so we're heading into a balanced market. Everything is looking healthier. Mortgage interest rates are lower. All right. That is going to give us a very strong spring market, a modest summer market, and then again, a fourth quarter market. Everything market-wise is showing that we've got some really good health. We've got good employment numbers, and our values and inventory are absolutely balancing out, which is a benefit to everybody. So there you go. If you have any other questions, let me know. If you want a copy of the press release, let me know. And in the meantime, you guys have a great day, and I'll talk to you later. Thanks. Bye-bye.